Hi, so today we are talking about IPOs. What are IPOs and how to ignore them? Yes, you heard me right. How to ignore them. IPOs come with benefits and a lot of risks as well. For individual investors who are looking to create long-term wealth, IPO is just one way to invest in the stock market, but it may not be the most efficient way, and indeed, in these days, maybe quite a risky way to create wealth. So, we are going to talk about really what an IPO is, what are the origins of the IPO, and of course, how you can avoid that risk really. Avoiding IPOs, really, what I mean is avoiding the risk of losing money in IPOs. So there we go. So IPO, like the name suggests, is the initial public offering. So it is the first time that a private limited company is going to access the stock market, list its shares, and now they will be available in the secondary market for you and I to buy and sell these shares as we desire. When you buy the shares of a company, whether it's through the IPO or through the secondary market, you become a shareholder eligible to receive dividends from the profits that they are going to distribute, and also to vote on all matters that require shareholder voting. So that's the thing about the IPO. It's the first time that a private limited company is accessing the public markets, and from this point on, once the shares list, they can be traded as one desires. Now, in order to keep the process fair, the capital markets regulator SEBI does prescribe a process for the IPO. It's an auditable process. SEBI has to be kind of assured that the company is not doing anything which will be in favor of just a handful of investors, because they're opening out their company shares for the public, and hence it has to be fair for everybody. So there is a process in this whole IPO thing, which companies must follow. So basically, that is what an IPO is. Now, in 2021, we saw several blockbuster IPOs. Really, these were companies that we were already associating with in our daily lives, fintech companies whose services we were using. And now we could buy these companies in the stock market as well. So there's a lot of excitement. A handful of companies created like Nykaa, Paytm, Policy Bazaar, and of course Zomato. And they came up with huge IPOs with a lot of room for investors to subscribe to. However, the assumption that investors make going into these IPOs is that it is always going to be a gainful investment, especially immediately after listing. And that's the kind of excitement that all the marketing material around IPOs generate, and people really look forward to that listing gain. Unfortunately, very few people sell if there is a big pop on listing, because they feel that that pop can continue for a long time. But let's bust some myths and let's see what is actually happening with IPO investing. If you look at these popular IPOs which happened last year, and of course, in 2022, we saw the largest ever IPO that the Indian markets have seen from the most trusted brand in India, LIC. And LIC's IPO was much talked about. A lot of retail shareholding went into that. But unfortunately, that IPO didn't really work very well. You can see that listing gains did come through for many of the fintech IPOs, but LIC did not benefit from that. So here is where the problems related to IPO start. First thing is really the pricing. Pricing of an IPO is very, very important. You pay attention to the price of a house you buy, gold jewelry, even a car, even a kg of onions, the price is talked about, right? But when it comes to investing in an IPO, there is just excitement about the company, but nobody, retail shareholders are not really talking about price. Is the price fair? But how are you going to assess whether the price is fair or not? Well, the price doesn't mean the number that you see. So if a share comes up with an IPO which is priced at 500 rupees, that's not the price the number that you need to be looking at. You need to look at whether the valuation of the company, whether the price relative to its expected future earnings is reasonable. Because when you buy the share of a company, you're really paying for the growth of earnings which will come in the next few years. What was obvious about a lot of these fintech IPOs that came up in 2021 is that the price was inflated. very expensive. But there was so much excitement around owning these shares because you felt like you knew these companies personally, that people went ahead and bought. What has happened since then? Well, you'll see the current prices versus the listing price of the IPOs, and you'll realize that pretty much all of these IPOs, including LIC, are sitting deep in the red. Nika is just about breaking even. So, really, in a period of a year, retail investors have made nothing in these highly popular IPOs, and there are lakhs and lakhs of investors in these IPOs who really have lost out. So, if you don't pay attention to the IPO price, and believe me, it's not very easy to assess. You have to actually look into the financial statements and whatever has come in the IPO prospectus to understand whether pricing is suitable and reasonable or not. So it's not an easy job for a retail investor to actually assess pricing, and that's why I'm saying that the risk is very, very high, because if you cannot tell whether the value the price is bringing to table is very expensive or not, then you will not be able to tell whether you are going to make gains going forward or not. So that is the risk. And for retail investors, because it's hard to assess this, the risk is even higher. Secondly, it's after listing that you have better access to the financial information about the company, because now they need to publish their financial results every quarter so that the public can see it. You also have better access to management decision making. What is happening? What are the corporate actions? Because they need to inform the exchanges about corporate actions that the management is taking. When you have more information about a company, you are able to take better decisions about whether to be a shareholder or not. Forget the price here, but just do you want to be a shareholder of this company or not? So that also matters, and access to information is better only after the stock is listed. And look, IPO is just the first step to buying a stock. You have several other chances because now the stock is listed and you can buy and sell it whenever you want, right? So why the hurry? Why do you want to hurry into buying something you don't have good information on? You are not sure how to assess whether the price is reasonable or not. And you really don't know what the future holds for this company right now. Why not instead wait? Let the stock be listed for at least a year, see how things are, see how the results are, see how the management is, and then take a call on whether you want to invest or not and at what price it makes sense. Also, the IPO that's coming of the company, that's probably not the only option that you have. There are probably other companies in the services space, in the manufacturing space, which are already listed, which represent some of this. Okay, in case of fintechs, that's probably not true, but definitely for life insurance, that was true. So why not go with what is already available in the market, which you're able to analyze slightly better in terms of, what are the contributing factors to the stock price, rather than jumping into something which is so fresh, so new. And again, like I said, price and it's whether it's expensive or not is not known. What is also happening with IPOs today, at least for the last decade or so, is that the money raised from IPOs is really about giving an exit to private equity investors, venture capital investors, and early investors in the company. Unlike earlier, in the 90s, IPOs were really about raising funds to grow the business. Now, those early funds have already come from these private equity and venture investors. They don't need the public shareholders for this. What they do need the public shareholders for is to be able to give an exit to these early investors. Now, who is deciding the price for an exit? It's investment bankers. Investment bankers are paid according to, proportion. Their commission comes as a proportion of the funds they raise. So really, it's in their favor to raise large funds for the company through the IPO. Large funds will come with high pricing. So the people who are exiting will be happy with the high price. The company, of course, will be happy with the high price. Investment bankers will be happy with the high price. And when I say high price, I mean highly valued, expensive pricing for an IPO. Who will not be happy? Investors on the receiving end of the IPO, because as time passes and the results are published, you'll realize that you paid too much for too little, and price will start correcting, which is what has happened in case of all of these IPOs, these very, very popular, very talked about IPOs which happened in 2021. And when they were happening, people were happily subscribing and justifying the valuations. But we can see that it was not right to do so. Okay, so IPO investing is very, very exciting. IPOs are primary market investments, which means that it's the first time a company is accessing stock markets. But for retail investors who are looking at long-term wealth creation, hurrying into IPOs is not the answer. Rather, it is full of risks. So you decide whether you want to risk your long-term savings in an IPO or be more prudent and use the secondary market, tried and tested companies, and wait for the IPO company to actually show its teeth before you get into it. The choice is yours. So there you go. I hope this video has made IPO investing slightly more clear for you and you understand what IPOs are and what kind of risks they actually can hold for long-term wealth creation. For more such personal finance discussions, everything about your money and your financial well-being, don't forget to subscribe to my channel. And of course, don't forget to read the article along with this video, which can explain a lot more about IPO investing. Thank you for watching.